Hi Lashi, thank you for joining me this morning in studio. As you know, sustainable finance is a growing segment of the market. RMB has committed to facilitating 200 billion in sustainable finance transactions by 2026. As a key member of the debt solutions team, as well as a relationship bank to so many of our clients, can you tell us how you are thinking as a capital provider about ESG and sustainable finance?
Hi, Danny. Investment decisions are increasingly incorporating ESG criteria as investors recognize the importance of ESG in understanding a corporate's competitiveness. And quite frankly, it has become impossible to avoid embedding ESG in how you do business. As a result, corporates are in a situation now where they need to make capital allocation decisions to ensure that they're able to translate their ESG goals into tangible outcomes, and that allocation of capital may be required to ensure that the ESG strategies can be delivered upon. But notwithstanding the increasing investor pressure that we are seeing, it is quite important as capital providers to be mindful of the local context in which an entity finds itself, particularly in the Africa markets where we operate. It goes without saying that each corporate will be at a different stage of their ESG journey, and that needs to be considered when capital providers are making decisions so that we don't inadvertently exclude certain markets from accessing capital. And maybe thinking about that, a question I would like to pose to you is, given RMB's status as trusted advisor to many clients on ESG, what role should we be playing to ensure that we balance credibility of the sustainable finance solutions that we provide to our clients, whilst also taking into account the ESG maturity and stage of the journey that the client finds itself?
Thanks, Lash. I think that's a very pointed question. Having been in the sustainable finance market since its inception on the African continent has truly allowed us to witness the evolution of the market. And our success in becoming the leading sustainable finance bank in Africa has really been through being able to adapt to where in the sustainability journey our clients are. At any given point in time, we balance out their maturity while thinking about how we incorporate international best practice and structuring principles. A very good practical example of how we were able to achieve this recently would be the Development Bank of Rwanda's Sustainability Link Bond, for which RMB was able to act as sole sustainability coordinator. In our capacity, we had to work to understand the nature of our client, in this case, the development bank. And that meant truly understanding as an African bank, the local context from a macroeconomic perspective, and more important, the national level goals that were in place. We also had to bear in mind that for a client of this nature, systemic change is needed in order to achieve their sustainability performance targets. Meaning one has to strike, can you measure things annually like we typically do, or did we need to think slightly differently about how we actually structured the solution? Again, to be bespoke for the client and where they were in their journey, and of course their nature of operations. We thought deep and hard about the local interest rate market to make sure that we correctly calibrated the pricing mechanism to ensure that there was also meaningful benefit passed on to the Development Bank of Rwanda. And ultimately, this transaction was really a success based on us having a very African perspective on how we do deals with African clients and leveraging our networks and ecosystems of various service providers to ensure that investors and all the other key participants in such transactions can truly understand where the client is. And that ultimately led to us balancing credibility and maturity.
Well, congrats to you and the team on the first for East Africa.